us. Hello there, good afternoon everyone, and welcome to this session, which as you've just heard is titled Unveiling the Digital Frontier, and we'll be considering in this session where traditional and alternative finance converges in alternative investments. Now, to say this is a zeitgeist topic is to underplay the current level of interest that we are seeing in this field. And in many ways, it is interest that is actually growing faster than the regulatory frameworks that are needed in order to reassure the more traditional investor. Some countries are taking the lead, and I'm sure we're going to find out a little bit more on that subject in this talk. But I have to say, I am really delighted to welcome our three amazing guests to the stage. They are experts in their field from all around the world and have worked in many jurisdictions. So we really are getting the best of the best when it comes to this topic. So thank you very much indeed to all three of you for joining me. Now, Eric, I'm going to start with you because let's start with a bit of an overview. To what extent are we already seeing a convergence of traditional and digital finances?
It's a great question, and I think it brings us back in the industry in our early days. One of the stamp of credibility that early participants were looking for was for institutions and traditional players to join the space. And there was a famous saying, it was called, institutions are coming. Well, they were not yet there, but people were hoping for that. And I think this meme over the years actually become a reality. Today, we have most of the major financial institutions that are participating in the industry, whether through trading services, custody, whether through payment and settlement, or through tokenization of real-world assets. Sometimes they offer directly crypto-native products, and sometimes they have wrapped those native instruments into traditional financial instruments. And if we look at the trading side to start with, and a bit of that wrapping, I think everybody is familiar with the launch in January of the Bitcoin ETF, which is using ETF, a traditional finance instrument, and having Bitcoin as the underlying, has been a tremendous launch. And I think it's the fastest growing ETF across all asset classes. And we were very surprised by the uptake. I was looking at the numbers this morning. More than 6 billion of net inflows have come into all the Bitcoin ETFs since the launch. Just yesterday, we were another 500 million coming in. So it's incredible to see the traction. That's, I think, on the trading side and seeing that merger. On the payment and settlement side, we've seen not only banks, but also network schemes like Visa or MasterCard using digital assets to settle transactions with their partners. We were the first to do a pilot, even it was 2-3 years ago, with Visa to settle our card program settlement with them. And we've scaled that program since then. So we see that really in settlement and payment, it's growing. And thirdly, when we look at tokenization, I think the first one that has really got to scale is stablecoin, tokenizing fiat currencies and putting it on the blockchain. Today it's about 130, 140 billion of market cap, and is used heavily for daily transactions and payments as well. So it's very, very exciting to see this convergence. It's happening and has come a long way.
Gautam, I'm going to come to you now because I'd like to know in which ways traditional finance can actually benefit from the tech that's being developed by the crypto companies. I mean, we've heard a little bit of it there, but and then also vice versa, because of course it's happening in both directions, isn't it?
Absolutely. I'll start by making a bold statement. I think blockchain will disrupt traditional finance more than what internet disrupted retail with. So if you look at e-commerce as a percentage of commerce, it's grown substantially over the last 20, 25 years thanks to the internet. Blockchain has the same capability to do that for traditional finance. And the rationale is the following. Number one, biggest power of blockchain technology is that it removes intermediaries. Number two, it allows any business logic or transaction to be coded on smart contracts that can run in different parts of the world without any manual intervention. And third, it's 24/7. So I think these are three characteristics of blockchain technology that allow traditional finance to actually get disrupted, not only from improving the efficiency of their cost basis, but also unlocking new use cases for banks and financial services organizations to serve clients with. There are three core use cases that we are talking about as we speak. One of them is real-world asset tokenization. I think Eric touched upon that. If you look at the amount of costs banks and financial services institutions have to spend in running collaterals, transferring, settling, and as well as clearing and settlement of day-to-day transactions, that is very, very high. With using blockchains, you can essentially wipe out most of those costs and then drive efficiencies. The other use case from a real-world asset tokenization is today, most of the alternate asset management is serving high net worth individuals or institutions. You can actually use blockchain to create tokenized fund structures that allow alternate assets and investments to be shared with mass users as well. So real-world asset tokenization is a big theme that's playing out. Some statistic there's about $2.8 billion of assets logged that are real-world assets but now being tokenized. Of that, 800 million is US treasuries, and that's grown 700% last year. So it's a fast-growing space, and some of the institutions like Franklin Templeton and all are going big in this. The other big use case, again, Eric touched upon it, is payments. It takes Visa 2+ days to settle cross-border transactions at the back end. We don't get to see it, but imagine the cost of capital that actually gets logged over 2-3 days among 11,000 participants at the back end. That gets unlocked with blockchain. And the third use case, which again, I think it's still underappreciated, is this new financial infrastructure, which is digital wallets. Now, digital wallets allow individuals to self-custody ownership of digital goods and digital assets. That itself can unlock multiple use cases in the future. So that's kind of my take on how this thing comes together.
You get a sense there of how fast and multifaceted and multi-layered this convergence is going to be. Now, Jenny, as a venture capitalist, I'm interested to know how enthusiastic you are. Basically, in investing in these new types of products. Are you already investing in these new types of products?
Totally. Now, very honestly speaking, our team very exciting. As you might know, as a venture capital firm, our major, I will say, job to pick what's the next big thing, what's the next, disrupt technology. Let me think about last 10 years. We globally invest tons of, amazing, technology company, sectors, for example, like EV and self-driving and SpaceX-related, business, and also like nuclear fusion, this type of thing. Of course, today's AI. Of course, our team will not miss this opportunity to invest in digital currency. This very organically, happen. I really remember, let me see, like 5 years ago, I visited one of the Silicon Valley's, big guys, at home, and also joined the AGM. I look at the annual report. 10% of the fund, the under management, they just very simple buy Bitcoin. Yeah, that's simple. So back to our investment strategy, actually, we did 3 things. The first, of course, we will focus on to buy Bitcoin and Solana, this kind of a blue chip type of currency. And more important, we have combined China and American team. So we migrate from China, Southeast Asia. Of course, we have a different team sits, different office. We invest tons of platform company like Converge and Mocha, this type of business. And years ago, we started to do mining business in the region. So we build our ecosystem we don't want to miss anything in this sector. Yeah.
I'm going to ask the same question to all three of you now, because obviously we've spoken about the ETF, and I imagine many people in this room have already invested in cryptocurrencies in some way. But I know that the financial devices, the financial instruments, are a lot more complex than maybe many of us have understood. So, Eric, I'm going to start with you. What type of alternative investments are you excited about and why?
Yeah, with representing Crypto.com today, I'm going to have to pick crypto as the alternative investment of choice. But maybe get some perspective, of course, the value that Graham has put together in terms of the ability for people to move value in a decentralized way without any intervention of something of value, and that is a store and a means of exchange, is extraordinary. And people are valuing that and putting a price to it. If we look at Bitcoin today, I haven't checked because the price has moved a little bit since this morning, but it's above 1 trillion, roughly, in terms of market cap. If we look at the gold market cap, it's more than 10x that. So even if things are heating up in the market, I feel we're still very early, and that's why I think it's a very interesting alternative investment for people to have in their portfolio. If we look at the overall crypto industry, so Bitcoin included, we're about 2+ trillion. This is the market cap of NVIDIA. Again, there's still a lot of room for growth for the overall industry. So I think for the intrinsic value of what crypto brings to people's daily life and for corporations, and the fact that we're still early in our journey, I feel it's a great asset to have as alternative investment.
I know that there was a crypto winter, wasn't there? Is this now a crypto spring, or have we reached summer?
I think we're in spring, but somehow summer is coming maybe a bit faster than expected, so we'll see.
Yeah, very interesting. Gautam, what would you say, which alternative investments are you most excited about? I imagine crypto as well, to a certain extent.
Yeah, so we are all here for crypto, so I'm not going to deviate too much from it. Fundamentally, we are a crypto hedge fund, and we invest across venture, liquid opportunities, whether it's equity or tokens, and we also do trading in Bitcoin and the assets there. If I just take a step back, how we think about approaching this asset class and how we think about investing in this, there are 3 core use cases at a very high level, right? One is this idea of a store of value, which is, let's say, Bitcoin or stable coins. So that's an area that we invest in. The other use case is, I would say, more speculative in nature. One can argue there is a world that needs that use case, and we have seen that even in the traditional side of traditional asset classes. We saw that with GameStop and other kind of such opportunities. So there's a use case for it. We stay away from that, but And the third one I would say is very technology focused. So what crypto does is it unlocks technology in a slightly different way. It takes the internet era to the next stage, which is Web 3.0. And to enable that, you need tokens that allow you to incentivize your users to be contributors to your platform. And that leads to multiple investment opportunities because you see very smart, hungry builders and founders building projects, and you essentially go and invest behind those. It happens to take the form of tokens because they prefer that route because A, it enables them to offer ownership of their project to the users and not having to spend loads of capital funding Facebook and Google for advertising. And then the second thing it does is it allows them to build open source platforms where other applications can be built on top of it, and then the value gets captured at the fundamental layer as well. So we go after any of these opportunities, and that has been our strategy, and we'll continue to be investing in that space.
Jenny, I imagine many similarities here, but which of the alternative investments have you felt most enthusiastic about? Have you already invested in, for example?
Yeah, like I said, let me say, if we go to the regulation angle, like Eric, you mentioned, SEC just have the approval of a ETF. I think allow global institution, LP and GP allocate more money to the sectors. Everybody feel more stable and confidence, and also for the allocation, side, if I pitch my potential LP, I would tell him, this is sooner or later you have to add this new assets class. Rather than you learn this much earlier and much faster. Yeah, of course, this today is still a good timing to enter this ecosystem. Yeah.
It's interesting, this sense of timing, that the time is now, and that there's a certain sort of sense of rushing, I think, maybe, for the more traditional investors. Eric, you mentioned earlier the collaboration that you had with Visa, but are we already seeing other collaborations between the traditional and the alternative finance offerings?
Definitely, I can think of a few, but I think I want to maybe spend a bit of time on our experience in the US and working with the CFTC as a regulator, which has been regulating derivatives on commodities for decades. And we've been working with them very closely, and were able to launch a derivatives product on cryptocurrency. And we were the first to expand beyond Bitcoin and Ethereum and start offering other currencies for derivatives. So that's very interesting to see, for example, countries like the US being able to use the traditional framework that regulators have put in place for traditional finance and use cryptocurrency as an underlying and still innovate and propose a strong value proposition for customers. Especially for us, we serve both retail and institutions, but instrument that allows people to hedge, especially when markets goes against you, is not usually available to retail. So we've tried to launch what we call in the US up-down options that give that ability and the value for our customers, but give them the peace of mind that there is a regulated framework, even if it's within the traditional space, that they can rely upon. If we look at what's happening in other markets, and in particular the UAE, I think the direction here has been to build fit-for-purpose frameworks. So getting inspiration from traditional finance regulatory framework, but making them relevant and adapted to the needs and the nature of cryptocurrency that are a bit different than traditional stock or bonds. And we've seen a lot of success, especially with the collaboration model that the UAE has with the industry. And we got licensed here, and we're very keen to bring those products in the market with a framework that is really fit for purpose.
Jenny, these types of, the UAE market, the Middle East market is just being introduced to these types of products thanks to companies like Crypto.com. You've had experience, obviously huge experience, in China and Southeast Asia. What do you think needs to change to persuade detractors, to persuade your old school, traditionally minded investors, of which we have quite a few here and a lot more in Europe, I think. What would change their minds? What would make them focus on more digital alternative investments, do you think?
Yeah, thank you. Let me maybe share my little observation from the recognition side globally. Of course, we have a China team and the US team. Actually, in the last few years, I'm back for Beijing and Abu Dhabi a lot. I'm based here, literally in Saudi Island, like I told you. Let me see. I will say, historically, China have the largest, trading company, platform of, Bian, right? And also they have a larger mining company, and even I think 1 or 2 years, even the largest Bitcoin holder all in China. But as you guys know, like years ago, have like a regulation issue. So most of young talents of startup companies, of course, the backed by our venture capital, they all migrate from China. Start from Singapore and Hong Kong and a little bit like maybe Thailand, Vietnam, this kind of thing. But recently, few years, I say Middle East, especially UAE, you guys did a great job. So many people just like us, they migrate here, China founders. Yeah, they create, they have the headquarters in Dubai or Abu Dhabi. They have tons of, staffs here, but they still can, remove work with the let me say, R&D team, and in China office, like they put, China have a very small population, 1.1 billion people. Of course, you guys know we have tons of, I would say millions. Every year have millions, young talent graduate from STEM, this kind of, engineer, this kind of very mature, engineers. So I think this model really work, yeah, and that's reason like a few of the company, yeah, in the ecosystem, you guys know, all Chinese or maybe Chinese American people founded, yeah. So back to your question, I was saying, we view our firm, like I said, we see some major missions baked, innovation, and people have, of course, the founders have made their dream and ambitions. So, we invest tons of this kind of startup company, but we will say if I tell we call ourselves the new classic investor. It's not really traditional classic investor. Let me see, like the most classic one is Warren Buffett. Munger, last few years, what he said, he will never, invest, will never pension. But we can view from like Berkshire through the new bank, which is South American's, digital banking, which is one of our major portfolio company also. So through this new bank also allocated to this sector. So people will change. Think about Munger, 99 years old. Buffett is more than 19 years old. They can convince and change. I was waiting to see. Yeah, I encourage you, all the investor, LP, GPs, just like I said, as sooner as possible to get to this sector to learn. Yeah, thank you.
Jenny, it's interesting that you've come to live here, and I know that Gautam, whereas you're based in London, there's an office here, isn't there? And I think it's clear to see that the Middle East and specifically the UAE is becoming a sort of fulcrum, potentially a fulcrum for these investments once it's sort of settled down. But, that's not the reality in quite a lot of countries. The regulatory framework just isn't there in many jurisdictions. I mean, are there countries that are taking the lead? Are we right? Is the UAE one of them?
Look, this is a new technology and new asset class. And anytime something like this happens, governments take time to figure out what's the right policy framework or regulatory framework. You have AI playing out now, similar challenges there as well. We are a global firm. Crypto and digital assets is a very global, borderless asset class. So we tend to go and set up office and have our operations in places where we are able to execute on our strategies. We have 8 offices globally. But in November last year, or year before, we opened an office in Abu Dhabi primarily because the way the regulations were designed, it was a lot more easy for us to set up our office. They were a lot more open-minded in terms of what this technology can deliver and can enable. So I would say that this region has been probably at the forefront of accepting this as a new asset class and working around this innovation. There are other regions who are also trying to figure out, everyone has come up with their versions of the policy, but I guess it'll take time, and it took time for internet as well. And now with AI and crypto, there are many priorities for all these regions to take care of.
Okay, so we've reached our sort of quick fire question stage. We've got about 5 minutes before the end of the session. I'm going to ask all 3 of you the same question again, which is I'm going to get you to look into your crystal ball slightly to see what kind of, we're going to refer back to our sort of title of where our talk is going. What are the transformative collaborations that you're anticipating in the future? And Eric, I'll start with you and work down my panelists.
I think I'll echo some of the statements that have been made before. I feel tokenization is where the value is going to be created. I was just reading an analyst from BCG just not long ago that estimate that the tokenized industry will be about 16 trillion by 2030. There's massive opportunities there. I do feel it's going to be focused on tokenization of financial assets, and I would say digital goods or gaming or social network assets. Rather than more complex assets like maybe real estate and others. I think this will take a bit longer. Whether it's, stablecoin was the first entry into tokenizing fiat, and then down the road tokenizing deposit. I think it's going to be very big when banks are able to tokenize their own deposit. It's a lot more capital efficient than stablecoin. And then you'll see stock, you'll see bonds, and other type of products that will be tokenized. I think the financial assets is ripe for that disruption. But for players like us and in the industry, we'll have to grow and if we want to be able to distribute these assets, we'll also have to get a new framework and new licenses that allows to distribute securities, which is not the case today for most crypto players. So there will be some transformation and some partnerships also with traditional players to get that done. But the size of the pie is going to be enormous in that sector. Yeah.
Very positive outlook there, as you would expect in many ways. Jenny, do you agree? Are there elements of what Eric said that you also see in your crystal ball?
Actually, I'm totally agree with you, Eric. But on top of that, I really want to share, I'm so excited, our team, to waiting for the next wave of our digital economic. So waiting for the digital currency plus AI. So, last 10 years, have a lot of data produced in our ecosystem, in this digital, ecosystem, and of course, given today's algorithm power. So I want to see what kind of new business model come out. That's the reason keep our team both in UAE, China, and New York team very excited and busy. We want to get the next wave of our, unicorn company globally for this sector. Yeah.
I wondered how long it was going to take before someone mentioned AI. There isn't, every single conversation, normally it's the first thing that comes up. So how about that? We got to about 27 minutes before we mentioned AI, which is brilliant. But Jenny, that is fascinating to get that sense of how that data is going to be used and how exciting that could be for this asset class. Gautam, last but very much not least, transformative collaborations for the future.
Look, I'll make another bold prediction. People will be surprised a few years down the line how many corporates and companies will have applications built on public blockchains. The extent at which the technology is progressing, it addresses many concerns institutions have to use public blockchains. But the reality is that's the most efficient way to use this new technology. I would say that will be one big trend that will play out. I also think this extends beyond just traditional finance. There are many other industries which will use blockchains, public blockchains, for multiple applications. And they will collaborate within the same industry. To just give you an example there would be, telecom providers put big towers everywhere, and then that provides us internet and network. You have an innovative way of connecting and building networks using tokens and using the power of capital formation of tokenization. You have projects like Helium that are allowing people to use their electricity and convert them into a network. What it does is that telecom providers can actually collaborate with companies like Helium to essentially not having to keep building towers or address some of those pockets of lack of connectivity in remote locations and collaborate there to share the same network that people use on a day-to-day basis. There's a lot going on which extends beyond just finance, where this new form of technology and capital formation will actually unlock multiple new use cases.
Absolutely fascinating stuff, and a very sharp learning curve for me, and I'm sure many in our audience who are just coming round to the idea of these alternative investments. So thank you very much to all three of you for joining us on this brilliant Investopia stage. It's been an absolute ride, absolutely fascinating to hear everything you've had to say, and really good stuff. I'm looking forward to maybe repeating this next year and see. Can you imagine how far we might come in just 12 months with this asset class? So I'm sure you'd like to join me in a round of applause for our three guests. Thank you very much.